Good morning and welcome to the Breakfast Club. Here we are on December the 8th, 2023. My name is Darren Hancock. I'm your host today. And thank you for popping by. Even though no one's probably here yet, let me just check on the YouTube. Here we go. ThetaWaveTrader. Jumpstart. Where are we? We are live. Here we go. Excellent day. What do we have in store for non-farm payroll today? NASDAQ, E-mini S&P, and Dow. So Dow's come back down to, I think we were mentioning this yesterday, this price imbalance down here. That is actually not where it should be. It should be right there. Yeah. So that's the price imbalance we're looking at on the daily. We should make sure that's actually volume imbalance. Right there. So we mentioned it would come back down into this level here yesterday, either in or stick around and just get below there. We put a line in here to reach for it, but it looks like it's just hit the top of the imbalance once again, found a little support as an inversion, and we've pulled back into the daily range. E-mini S&P looks like it's just going sideways still. We're still got that daily fair value gap above us. We have equal lows, relative equal highs. So, and we're still in the middle of that range between the two of them. We've hit the mean threshold of this order block. So thoughts are now mean threshold of this one, which we've hit. We've got to make a move up or down on the daily. So we'll see where non-farm payroll takes us today. The 10 o'clock news release. Yesterday, I was saying that the day would probably end up inside these two lines. It popped up just above them, actually went right through, cleaned the tops out, and today we've just retraced back in between them. So we can let those go. We did not stay there. We were close for the high, but we actually went through it. So what do I know there? Let's dig down a little deeper. Oh, look here, look here, look here. This is what we were predicting yesterday. Remember saying 16,055 was the key level to reach for? I kept asking people, why is that an important level? Nobody answered me. Look at there. We reached the midpoint of that breaker, right between the eyes. There's 1665, so we're 10 handles above. Nicely right into the middle of that breaker. Now we've pulled back down, so it was a very key level yesterday, and good morning, Derek. How you doing, buddy? You're in your tree stand, I see. Ready for some pickoffs? So I was just talking about how this is that key level we were looking at the other day. You and I can bask in the glory of that. Finally hit it. It's what we were aiming for on Friday. It finally hit that Friday point that we were hoping for. Like on the Beezer, quite well. And those of you who are wondering what it was and why that price was significant, here's your answer. Keep an eye on 60,055, folks. right there. That 15-minute pocket right there. I should have put it at 16,060. That was the complete fill of that area. Also, it was an opening point. So right there will give you a little mini breaker. The downside, that upside breaker right there, midpoint. I still would have been off by 5 because it ran up into the midpoint of that breaker. But that was the key area we're looking at on the 15-minute. And bingo. Oops, no, we were aiming for that. That was on Friday. We were aiming for that. Didn't quite get it. Oops. And we tagged it there. So my eye now that we've run these equal highs out here in Asia, I did not grab that. There's your short here. Return to, so we broke up above, came down below this low, come back into the fair value. I wanted to see at least half of this London range get traded back into, but it looks like it just came back to the edge of that mark there. All good. Stand by for a second. I will be right back. My wife's heading off to work, so I'll be right back in a sec. Always take time for your family, folks. Always take time for your family. That's why we do this. That's why we do this. Oh, good morning, all good. That was the super call for yesterday, several days ago, last week. I left it open, yeah. So here's the breaking structure. London takes out the Asian high, rolls over, now creates or takes out the low that it created here. It comes back into, usually it'll come back into, taps the Asian low. And I was kind of hoping that we get a run back up in here for 50% of this leg that took out that high, so that when you take the fib tool and you extend this down in terms of four banger from here, that'll take you right down into my little curiosity level here. I'm looking for this regular trading hours gap to get traded back into and eventually extend down through here if we continue short. And we also have a New York open that was only hit once here in London. If we come back and revisit that, there's a confluence of gap, old lows, time, and pretty close to the four banger here. So that's where my eye is going right now. So this was the opportunity to get in short here when you came back to revisit this breaker here. I didn't see it quick enough this morning, but if y'all are in that, that's your short, and we're looking for here and here. And I don't want to be late to the party, and I don't want to chase price, even though I feel like chasing price right now. I'm not going to chase price. My rule is I want to see half this hit, or at least a return to the consolidation. And half of this leg will be this consolidation, this Asian range. So if we open up at 10 o'clock, or at the open and run back up into here, that might be a short. But it's non-farm payroll day, people. It's non-farm payroll. Not for punters, not for professionals, not for people, not for pastors, not for poachers. Love that projection. Could be what we're looking for today. Kind of thought ES might want to go higher to take out the highs before doing that, but wasn't convinced on it. Yeah, you know, I looked at this too and I thought, look at this big gap that left here. This was the open of the new day, not open midnight. This was like 1600 and then opened up at 1800 2 hours later and literally gapped up. I was watching that yesterday going, am I getting something wrong with my data feed? What the hell happened there? Because it's electronic trading hours, so why do we have suddenly it rip way up there, cleaned out the highs on ES, like ES was sitting, where the heck was it? Was I hallucinating? Was I an hallucination? Stand by. 6:30. Yeah, it's up here somewhere. It's already through this. 6:30-ish. It's up in here. So why is that not showing up on there? Oh, there's no data there? Why is there no data? Why am I not connected? What's going on? Stand by, paper trader. Let me get connected here. See, this one's reading 4660. Am I in the wrong one again? Stand by. Why are they so different? December contracts. Ah, we are in the wrong contracted. They are not the December contracts, senor. We want the December contract. Trade of 8, that's why. Okay, that was throwing me off there. I was not in the markets I was supposed to be in. Okay. Let me get a new bearing on this now. Yeah, okay, so we've got equal highs sitting right up here. We have equal lows down here. We're in the middle of the range between those two. So for me, it's on the daily. Pick a direction, right? What am I on here? That's 1 minute. So 1 hour. We haven't taken out the highs. We're digging back into this range as well, like NASDAQ. There's 3 banger right on the money. Yes. Stand by, right back. What was that up? Okay. But it is for golfers. Oh, it is indeed. Non-farm payroll. Now you can say it's now for players. Golf players, that is. I don't show that on TV. Yeah, I didn't show that gap on ES probably last week for them. And we'll move on to the March off-grid. The environment is full of mines, says off-grid. Yes. Tread lightly, my friends, tread lightly. So a quick little slider this morning was right there. Clear out the Asian range, break the London range, return to the bottom of the London range. Quick little two-banger from there. 1, 2, boom. Hit it nicely. That was a Lauriston slider right there. I keep calling it a Lauriston slider. It's probably just a classic Michael proven model. I'm going to let this sit up here for a little bit so we can bask in the glory of our prediction last week. Derek. What have we got? Let's go through some of these other ones here. Yum yum. The Dow. Dow's returning to that little place we had outlined here. That volume imbalance, price imbalance, whatever you want to call it in here. I had a little run yesterday. I had this one reaching for here. So we'll see if we still get that line hit just below here. We'll see if we get that. Or we drop back into this volume imbalance. Now, the decision will be how does it play off of this volume imbalance? Does it run through it with a bold candle deep into this order block and then we start to run through this BISI here? Or do we just run back to the top of the BISI fair value gap and then start to continue to climb up, making that their little bull flag, retail bull flag, then run for these old highs? It did clear out these old highs. This high here took these highs out. We've returned now, so you're looking for it to go to a discount. It's in the discount of this candle here. Finished filling in that fair value gap on the daily right there, and we've got a little bit of support of an inversion on the volume imbalance. If we pull the NASDAQ, same thing here. We've now gone through it. You see, we've come up inside it, opened up, closed on it, opened on it, and then ran back through it, and now we're back into this order block. So if we come back to revisit anything, so the question is, do we just come back to the what do we got here? This breaker here. This breaker here. So the top of this candle here is 15,714. The low on this candle is 15,721. So we're still 6 before we even hit this guy here. And the midpoint of that candle, that breaker there, fills this fair value gap. So if we do have a run down below the threshold of this candle, look for this fair value gap to fill, that breaker to hold price for another run back into that block or that little range that's created here. How's that for a long-term prediction? Which I think coincides with some of the weekly stuff we talked about on, I think it's on this one here. If this was a regular non-farm payroll day, that would have been an absolutely delicious entry for a short for this guy here. And that will be 6003 down to here would be almost 200 handles. Eek! Almost 200 handles. Despite non-farm payroll day. That is a beautiful setup. It's funny how you can scare people off of trading just by calling it NFP. It's NFP. Come up with all these new names for NFP. Non-stop farting, people. Non-stop farting. It's gonna stink today. No fair play. No fair play. They're not playing fairly. So 2 minutes away from the opening. Do we have a sudden spike up? I look for 50% of this leg here. Is Jody coming back again today? Did she learn anything the other day, Derek? I'm sure she doesn't want to see all the chaos of a non-farm payroll day, but it's a good little learning tool just to show her what how the markets can beat people up. I hope Lauriston managed to get his data sorted out with that Ninja Trader. It's so important to get some clean data, hey? 10-minute delay can destroy your account. Look at this inversion right here, all the way through. And that brings me all the way up to 50% of my, if we take the full fill of this. So look for, not that we're trading any of this, but look what that regular trading hours brings us back into. Asian range. Full fill brings us back to the order blocks. These last few this is the breaker that breaks these guys. That would be a nice little fill. Tag. Come to my area of curiosity. Two minutes in. Did that hit the 60? 58? 57? 1.5. The bodies respected that. $15. I think she had some morning appointments this morning, so wouldn't be joining us. I understand she's working on moving her morning appointments going forward. So, oh wow, okay. 1 hour fair value gap on NQ and bearish breaker look inviting for a sell. Yes. Yes. The breaker. There's a little fair value gap in here. Fair value gap in here. This is that kind of rule that we were trying to set up, right? We said that if we get these breaks below, if there's a fair value gap in the middle, just below the break, That's the one we want to return to. So ideally, it would be nice to return to that fair value gap there, which will give us this big ass break right here. But we're looking for that. If that's a high, was it an open close? Where's the open? 97. Close. 96. It's a down candle. So if we have that run out from that high, brings us back into a fill of this fair value gap right here as you're short. It is also the tapping of that Asian range low. Doesn't quite fill this gap here, but 50% of that. Let's take this guy here and just go to equilibrium. It's the fill of this fair value gap right here. The 1 hour fair value gap. That midpoint there puts you right in the middle of that fair value gap here. Not quite, just under it. Well, this is good because remember I was talking about, oh, I wanted to chase that. Here's the reason why. You don't want to do it. Non-farm payroll day before, that was before the opening. Wait for your entry. Wait. That's the I'm just looking for these stupid little icons I can stick in there. gotta find a way to try and can we send this to the back? We can't. Now I'll return to the midnight open candle. Would clean up the rest of the gap this morning on regular trading hours, bring us back into a 2-minute breaker. And 10 has some more red star news. So caution. Oh yeah, I'm not buying anything. I'm just curious to see if this is a place to get our reversal. Get back into this original consolidation here. We're just short of the Asian session now. There, just hit the Asian session. And we're just coming up for that 50% of that leg we talked about. Will I use indicators or tell what your trade is? Well, I'm telling you, if that was my trade on a day that's not non-farm payroll, I'm looking at 50% of this thing here. Then you go down to the 5-second chart and sit and wait for your entry to prove it. If not, it continues through. Look for these two, this last candle up here. And if you lose that, then I'm wrong. We're probably going to keep going up. So there's 50%. There's the swing low, or the swing point. Now look for this little guy right here. That's your New York session open. Do we get a reaction off of that? We're through the 50% of this consolidation. So where we close on this candle right now will take me either in or out if I was going to go trading this. You see a wick come up to here, but the body has to end below here. right off the New York Open. It's an area sensitivity we mentioned. You go down to a 5-second chart. There you go. Ding right there. Original consolidation. That's the original run. Breaker. Okay. Back to our 1 minute. 15 minute. Now you go for 15 or 10 handles or whatever it was you want to get off of that. There's 16, there's 26 handles, there's 30 handles right there. So you could get out there. If that was my 50% entry, there's 13 handles right there. When you look at that 5-second chart again, that's the high. Return to the breaker here, and then short that. I think I said ding down here somewhere. So a little bit of a drawdown. Take your 10 handles, move to the sidelines. Not that you would trade that again, it's non-farm payroll. But we're just kind of looking at some ideas for price to return to. If you're looking at the premium and discount, you would be over that 50% of that range. So you're looking at your first area here. That's already been tagged. So you think, okay, what's 50% of that range? Or the old Asian range? That'd be down here. Then you say, well, I want 50% of the leg that took out that high. So well, that one's there. And then the other up one you've got is this low. Return to the original midnight open and that breaker. Those are the PD arrays that I see. And we hit the really nice premium array right there is the midnight. You come back for a quick chunk of cash, 10 handles, whatever you want. Again, non-farm payroll, you wouldn't play. But if you were, that would have got you 10 handles right there. Roger WX, you're new to our little group. Welcome. What part of the world are you in, Roger? That's not my buddy Roger from Australia, is it? I only see buys, no sells, because up momentum. Oh, you got to get through that candle first before I'd say that it's a buy situation. You're between this candle here and this candle here, so if you see a buy opportunity there, if you get strength off of, yeah, we've got this breakout here off these equal highs, so if you can get this high, these equal highs to hold and then run up above there, sure, I go with bullish, but you can say right now we've just returned to a premium and we're going to run back down into this candle here. So yeah, I could argue both sides of it, but if you're pretty confident that goes bullish, then go for it. I will not supersede you, my friend. I hope you're correct. And almost there. Bingo. All right, so we've hit that candle now. So we're between that guy and this guy, and we've hit him. That would be a final resting place of any trades that you got right now. That would give you a nice nifty 60 handles right there. 40 handles. Right to that order block. So now, depending on which one of these arrays we play with here, we could revisit for a more bullish return to this this candle up top here. $9.41 candle. Yeah, I don't know why I'm playing on the 15-minute here. Fills that 941 candle. Good point. So now, do we hold price? You're right on that. You've opened. I love it. You've come down, touched it, filled it, closed on the high, opened on the high, and you're back up into this guy. Here's mitigation. These are tight little candles, man. So now you want to see it come down into a discount range again. We've already hit this one here, so the next point is like the threshold here. Or that candle, I don't know what that one is. Does it open and close on the same one? 50, 86, no, it's a bull candle. I think your bearish projection looks like it has some substance to it, big D, and that's where I would be looking down into the new week opening gap of Sunday, the 19th. Yeah, if you really want to be big bullish, or big bearish, I should say, we need to get below this low here. Yeah, it's working itself down right now, but Roger may have a point here. If we play off, if we keep this threshold here, and we've just returned to this consolidation, we break above it again, come back down. If we find support at this, inside that fair value gap, in this consolidation, then I'd say Roger has some a good point there. If you look at that breaker, last stop close candle, before it ran down, we're already through it. So you could say, well, we could use a cluster of these candles if you want, because that's a small tiny one, so you like a bigger body. They're tiny little things to play with. Hey, let's stretch them out, make us not feel so bad. So now that you've lost it, I'm more bearish if that breaker didn't hold. Consolidation, this is all choppy chop chop, so I want to see it get through this mean threshold of this candle here. These ones are all inside this candle, so I want to see it eat through that first. So we're just coming back into order block here. See how we broke down, come back up into the order block, broke down, came up into this cluster of order blocks here, or this mitigation, broke down, come back up inside order block. Mean threshold is what you want to see hold, which is also the inversion fair value gap here, and then continue to grind down. But if we blow through this and we get on top of this high, things start to change. You start looking at this candle now, and I want to see if this inversion fair value gap holds price to continue to the upside, where Roger's idea of going long was a stronger possibility, because we're coming back off, playing off of here, right? So you can almost argue two different sides. This supports Roger's higher price. In my eyes, but you know, my eyes are 58 years old, so look at this inversion here. We've come up. We'll see where it closes off here. We're just coming right back into the body of this mitigation block here. Woo! We go. Oh, it's 10 o'clock. There you go. Rippity rip. Roger's like, yeah, I told you so. All right, let's get back to this one. See, there's a difference of opinion there, right? But that doesn't mean that he was wrong, I was right, vice versa. We were looking at two different objectives. I wanted a real quick little grab some super sniping pips, So that order block was where I wanted it to come back to, right? There's your entry, discount range, and he was looking at a higher time frame perspective. Perhaps he saw something on a higher time frame that says, hey, look, I think this has got more bullishness, and came back to the order block. So sure, we ran up there. So remember, we were calling for this one, and then the next one was up here. Well, there you have it, and we blew right through it. So now, does that take out the highs? Roger was right. We had a bullish run, but we had to come back to a discount before we got that bullish run. So we were both right. Not that like being right matters, but it's whatever. You've got to know what your narrative is, and you can't discount Roger's narrative. When I don't fully understand what his narrative was, so he might be absolutely right with the way his narrative played out. Mine was a smaller time frame narrative. I was down in a 5-second chart, so I'm not looking for big bombers. I'm just looking for quick real returns to areas that you can capitalize on some quick profits. So look at this candle here now. The mean threshold of this order block here, we're right close to that now. If we blow through this, then that breaker we've been sitting on the hourly, do we work the opposing side of that breaker? So we run the bottom, the middle, now the top. Or we've just ran the highs out here. Is that a stop run? A quick little stop run back into this order block here, and a continuation to my area of curiosity down below. It's news. Why don't we trade it? Yeah, I took the high out. Let's go. Let's go. It's here. It's here. Is somebody stuttering? Like, why is there the news just ran the highs out? That was it. Remember Michael's NFP trade setup? You wait for the first initial impulse from the news release. Wherever the impulse is the if it rips down and then rips up again, it's the down where they intend on going. So they go pop down. I'm going this way. Fake everybody out by running up and then jam it down. Look what it did here. It just opened and shot up. So this may be a continuation on Roger's idea of a long. So the recent highs, yesterday's lunch high was here. That blue line. So this projection, I'm going to remove this because that doesn't count anymore. That was the 3-banger right there. And those of you who are new, check that out. From there to there, it was a swing projection for a 3. 1, 2, 3, right on the money. Creating equal lows. finding support off the top of the regular trading hours gap. We pop up above it, dig back down into the order block, hit it perfectly on the way up, come back down one more time for the mean threshold. Now we're looking for higher run. Just coming into that breaker now on the hourly. London's high. There, just took out the London high. I guess that's a silver bullet entry right there. There's 10 o'clock, 10:01, silver bullet entry. Take out the high that occurred before your silver bullet. From here to here will get you 21 to 71. That's 50 handles right there, folks. Right there, bang, 50 handles. 50 handles, just ran the high. Now, was that all we needed to return down to low, or do we continue up and finish the rest of that breaker? If we blow through the rest of this breaker, then there's more upside. Yeah, that was the New York session. Yesterday's PM session that was taken out here. That's what that blue line means. Go back to the 15-minute, you'll see it right there. Let me get rid of all these things here now. Remove that. We'll remove these guys. Now cleaning out that breaker on the upside. So where does that take us next? Let's go to the daily. So we've got these upside running for the highs, midpoint of this wick, and those old highs there. Nicely off this order block body, running for upside. 16.96, 16.10. Oops. So that breaker is gone. How many people are trading this right now? Just out of curiosity. Put a little thumbs up in the old chat line if you want. I'm just curious to know how many people are catching this. Roger's got a nice little run if he was brave enough to get in that. Four-hour session has upside targets. Oh yes, indeed it does. Indeed it does. Good eye. You steely-eyed missile man. If we hit this, that big 4-hour breaker there, well, it's not really a breaker. It would be a parent breaker, that big run down there. Is that the breaker on the 8-hour? I don't think you can get an 8-hour, can you? 8, oops. 8 hours? Yes. No? Mitigation, maybe? No. So we've already worked that 4-hour midpoint. If we take out the high here, bring us back into this mitigation block, I guess it could be a breaker, swing point. Anyway, I'm looking for this guy right here. If we find support on this, inside this thing here, and we reverse, your eyes go down here. This pocket. We'll see how this rest of this plays out today. Equal highs. Inversion. That's what held price we drove through. Inversion held here. It held here. Now will it hold here and make triple highs or run through them? I didn't play the news because the rules, even though it was a silver bullet. Good man. Good man, sticking to the rules. Good call, Greg. Good call, Greg. There goes the 4-hour high. All right, so those highs are taken. Now, does the fair value gap hold price, or do we find support on top of that and we have a higher objectives? And then my idea that it's returning back down here, we can eliminate that idea. We'll eliminate that idea if this fair value gap gets broken. Now, here we go. Now, if we break this low with a big bold candle, and another candle, and then we return into it for this candle here, then there's a short. $46.20 on ES. Let us come back to this one. Finally, we're digging into that daily fair value gap we've been asking for a while now. We've run the highs. We're going to run this high over here at 46.12. We're getting close to it now. Then you start digging into the midpoint of that fair value gap, and then the body of that breaker. That 2-day breaker right there, which is also the mean threshold. So the hourly, look for that mean threshold right now on the daily fair value gap. Does that support price on top of the 2-day breaker, or actually run through it? And there's a small price imbalance just above the daily fair value gap. There's a little volume imbalance up there. Lori, we missed you, man. Did you have a little sleepy in today? Or did you finally get all that crap sorted out for all that data? Is bullish. I'm thinking that the fair value gap on the daily is a breakaway gap. Ran some errands this morning. Still delayed data. Dang. Now, if we were to continue up, this is the silver bullet for me. It's that There's the 10 o'clock one down here. Obviously that was a nice one. And we also have continuation to the upside. So unless we get a big bold candle, bearish candle going down, you could get bullish off that one there. For a quick, if you're trying to grab some quick money above here, top of that breaker, or that top of that 4-hour fair value gap. It's in a real premium portion of that run already. There's 15 handles. Surprising when you're looking at NASDAQ how quickly you can make some handles. Order block. Continue up. Open. Okay, that candle's eaten. This one's valid. We're going to go sideways for a bit. Make up the mind. Come back to fill this maybe. Rejection. There you go. There's your high. That's 15 handles right there. Yeah, that's that smaller one we talked about up top there. On the daily. This one up here. Revisit the midpoint. There's a little imbalance here. Ooh. Okay, that changes things up. So they took the high of the 4-hour fair value gap we talked about. I like that. That's a nice little candle. Give me a couple more of those. And we have a smart money reversal. And we have a Ding dong projection. Ding dong. Ding dong projection. Swing. Do do do. Project. All the way back down into here. Yes, I like this. Okay. Create a fair value gap here, please. Stay down. Leave that open. Good. Fair value gap opened. Return to it. Inside that little puppy right there. They're just returning to the body of it right there. So I could just leave from here. It's the right time of the night for making money. There you go. There's a return into the fair value gap. 50% of that price leg. If we were going to take 50% of that, I'm just curious to see if this, oh, well, there you go. That's past the 50. We're back into that breaker. So, did this. Now, if that doesn't hold, we've got more upside. We did not get a body break below this. Now that, well, yeah, we did right here. Okay. Right now we're still inside that 4-hour fair value gap. If you're down in the 1 minute, this is like the 1 second or the 5-second evaluation on is this going to go short. But I want to see it get through this 1 hour, get back, find support at that. So this thing, I like this to happen down below here, like below this guy here. Come back in and create that as the run, not inside the fair value gap. But if you did think about that as a short, your stop loss would be right above that high. Just remember you're inside this fair value gap now, so you're in that premium area. Midpoint's the only thing left in that one. Order block here. You want to see this give way for this to support that downside run. If that gives way, then it supports an upside run. See how the bodies are respecting the inside of this fair value gap on this side? You want to see it blow right through there, come back and find support at that. So far we're between these, cat and mouse between these two order blocks. Yeah, if this keeps providing support, then that could be your upside run inside that. Because now all of a sudden this inversion fair value gap that we've worked, you come back, filled it, gone through it, come back. Now we're finding support at it. That would be Craig's idea of further upside inside that inversion fair value gap. So I want to see this candle here hold price if you want to keep going up. And it's not, so this is continuation on the downside. If that wick, you got to see that, there you go, push through for the downside, and you want to see this provide support. Now we're pulling back in again, so wicks do the damage. Wait for this candle to finish up. It closed on there, opened and continued down. So far that setup is working for trading inside here for the short. inside that 4 hour. There we go. It's, once again, it's Friday. It's tempting to take, but no. All right, so now we're on the other side of that 4 hour fair value gap, right? Now, this is what we're looking for. We want to see this big bold down candle now. Now, a return back into, this is another inversion gap we've just created. Now you want to see a return to this, find support here, or back to this mitigation block, or that breaker, breaking that low. So if we return back into here, or this breaker inside a fair value gap, that's actually a short from there. One, two, cluster of 3 entries right here. Premium portion of that little run up would be up here. It could come up as high as that guy there, but ideally it would be nice to see this 2-minute order block or breaker here give us a return into there. The body closes on that wick in there is fine. There you go. You can either go straight down from here, which is the return to the 4 hour low. Look at this, despite non-farm payroll, we're still getting there. 15,998. 15,998. That gap there. Return to the gap. Take this low out here first, and then we're looking for we can take this big run here. 50% puts us right on a fill of that right there, because this may be just a big deep retracement into a bigger run back up. So we're just coming back into this range here from the 10 o'clock open, pull back into a 50% of that range, and then start running for those higher prices that you were talking about, Derek and Greg, what you were talking about, getting those a potential run up. This could be that 1030 pull back into 50% of the range, and then it's taking out all these trailers and then decides to start running back up again. So look for this fair value gap to fill, and then wait and see if you got anything holding at that price. If we decided to skip that one and go with the first swing point back from here to here, 62%, we're hitting that there. Bang. Okay, we've hit that order block now. Now that's the 50% of that range. Nice. Through the order block. We closed on 50% Open wick down. Now do we drive it back up again? Are you still trading this, Derek? You taking bites of this? Smart move, man. That was a really beautiful entry right there to go short. Right off that breaker. 50% of that range. Solid exit. Now, I'd like to see a return back into this guy here. Oh no, we're blowing through that. That's good. Old high of the gap. What is that line? Ah, it's the midnight open candle. There you go. I took a sell bite side when I can't see when the green candle retouched the 4 hour. I sold right there. Yeah, smart. It's a good move. You're still in it? Tell me you're still in it. Cleaning house here. 15,893. You're looking for 15,893. 15,893. Oh, that's way down here. I should have kept my little smiley face on down there. Or my curiosity face. Remember, I wanted to see that hold. If that held, then a little Mr. Curiosity face. This all looks good in here. And he was down here somewhere, I think. Oh yeah, there he is. I still left him on there. Okay, good. Let's just move him along to here. By the time that settles up, could be here. So look at the 4 banger right there. We're looking at that projection. Should have kept this on as well. There's 4 banger right there. Right to your money. Jeepers creepers, we're calling it on a Friday. This, I'd love to have called this on a Tuesday or Wednesday. They've been killing it. I'm buying these. I have to I'm forcing myself not to touch this on a Friday. This is more of a self-discipline thing than a, even though they're staring you in the face. Some really nice entries. We have next week, Lauriston. Don't feel obligated to get in, man. I wouldn't say, you know, mind you, Friday afternoon, back in what we call in hang gliding is glaze off. This is the analogy, the little metaphor I'm going to give you here. We have this thing it's called a glass off, actually. When you get this, when you're riding thermals all day, it's been a hot day, right as the sun's going down, everything, the wind calms down, and then the heat from the ground is a constant rise of warm stable air lifting up just before sunrise. And if you jump off the mountain and you catch that glass off, it is such smooth air to fly in. It's really an amazing thing to be in, because it's just smooth air all the time and it's constantly keeping you afloat. So anyway, that's my analogy. So if we have a hot day like this, you might get a Thursday or the Friday afternoon just nice and smooth, easy, meandering, either down or up, and we should be able to catch really simple runs. So the afternoon for Friday might be your glass off moment, which is that return back into 25% to 30% of the range of the week. Michael's TGIF Fridays. So if you're looking at the NFP trade we talked about this morning, when 10 o'clock opened up, that was your hint right there. It did not even give you a pop down. It said, I'm heading up, came back down. So that first little impulse leg that you see he teaches was the run for the 4 hour. So that held true for his NFP trade, and we'll see what the afternoon looks like. It looks like the news really didn't affect the markets a heck of a lot. We just got that first little impulse. Return to the top of the gap created by the regular trading hours. We're bouncing off that and the top of the midnight open candle. And you're going for 15,893, Derek? I want to see this hold your price then, anywhere inside that fair value gap, and this one here. We could get a retrace. Right to that low. So if you get a retrace to this low here, inside this fair value gap at the 50% mark, that's the next price leg down. And if that was the next price leg down, from here, that will take out these lows here. Tea time is 12:35 p.m. So you guys move this market some more. Or can you guys move this market some more? I heard you ICT guys move the market. Yeah, we kind of tell it what to do, man. That's what we're kind of boss it around. I'm not going for anything at this point. I'm well into the end of the week. I'm too long island iced teas at this point. But yeah, as I'm teeing off at 18, I would think price would move around 15,893 or lower. Mm. $15,893. Oh, for at least this low here, the Is that the AM session from yesterday? AM session from yesterday. Anybody reading any good books? How's the markets treating me, Darren? Well, you know, the markets are great. I've been calling it like a demon today. But I'm not trading. I haven't taken one trade today. This is more of a tape reading session and actually no, it's not a tape reading session. It's been good reading the tape. It's been pretty accurate reading the tape, but taking trades, I am forcing myself to stay out of it because I am trying to discipline my mind to not, if I'm not going to do something, I'm not going to do something, even though we've been calling some beautiful little trades today. And this might be just yet another example of a nice setup for a short. You got your take profit, Greg, on 14. Oh, you're still on NASDAQ. 1605. So between here and here, we'll see what happens on that one. That would be the inversion. You could still use anywhere inside there. Okay, so that one is going to be up. Then we're going to continue to play with these now. Go on to here. And that puts us in that order block this time. Brings us back to this old consolidation high. Midpoint. I guess you have the body here for this breaker if it decides to continue to climb into these fair value gaps here. 62%. Oh no, 62% retracement. $50, 62% puts us right in there. 50%'s on the money here. Right there. Ah, you going to 62, my friends. into the breaker. Body. Mean threshold. This could be 62%. Off there. And aim for here. If we lose these two, midpoint threshold, yeah, that idea is done. Now, do we hit this 4 hour once again and react off and come back down, which would be 70% retracement, optimum trade entry for a short? Hello, Sir Gary. Sorry, I was on a call there. So you want to see this breaker hold price for a return back down? We're back into this consolidation. If we lose 50% of that, or 50% of this candle here, then definitely more upside. The fact that we took this breaker out here already is, for me, more of a bullish run. But you got to get through that guy now, because if that holds, then we could be looking at getting it beast back into this range here, and then you've got that range bound crap going on until somebody makes up their mind where they want to go. So we're going to get through this candle here. and that candle. So there's like breaker there, ran below, breaker here, ran below, below. So they got these two dudes. We had a high resistance liquidity run, hit off of that. Now you got a low resistance liquidity run on this side. But we're back into this breaker. Midpoint of that breaker is right there, right off that candle's body. See how she acts off of here. Alright, nice, drive through. Through here. Line in the sand is right there. And she's gone. Rejection block next. Nope. Bodies are still holding off this. Just ran these little highs out here. I'm not trying to hold on to a short. I'm just trying to say you don't turn bullish. Well, you probably turned bullish in the moment you blew through this guy here, but you would have hoped that this at least 4 hour would have held price, and it didn't. Midpoint didn't. 75%. If we take this thing here and we look at the range, we're at 75%, right on the money. That line in the sand on that breaker is finally blow through it. Rejection block. We'll see where that candle closes. We're running to the top of that 4 hour yet again, creating equal highs. The bodies are still respecting this. Wicks do the damage. We get through that candle now. We're through this fair value gap. We're going to get through the bottom of this again, find some support at it one more time, and continue down. If we're, see, that's not fully bullish until that threshold gave way, and the bodies have not blown through that. The wicks are eaten through it now, so it's, to me, it's lost its luster. but the bodies are still respecting that threshold, so I still can't go bullish until that happens. But like we say, this did not look good here when we ran through it, and we ran through all of these gaps. Inversion, fair value gap, body broke through it. That's usually a good indication that we're going to go, the inversion didn't hold. The upside right there. So now you want to see it blast up. We got to this order block here. You're going to lose this one now. Back to the mean threshold of that, or the consequent encroachment of that 4 hour. Also off that breaker there. Delivery has been bullish for the opening range, not going down today. Maybe next week. So we came back into that. See, you can't give up on it. You can't go bullish until our PD arrays are eaten through. That's the last line in the sand right there, and it literally pop, 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 pop. Body's respecting it, and now we're breaking down. So we're looking back into this range here. Now we're finding more support here, here, and here. We've got multiple confluences now that support a small little return lower, at least, into that range again. Return to here, return to here, return to here. Come back in, find support at that 4 hour yet again. You can come back to that low. Leave that open, or come back into this order block. See where that ends up in 6 seconds? If the body closes on that. There you go. Then you start rinse and repeat, folks. Rinse and repeat. 50% brings us back to here. There's your 50. Now lower into that discount. The array has now made it back to a discount. Now you can look for, you want upside prices? You can have your upside prices from here, or we can continue down. There's not a lot down here other than the size of little guys here. These are all inversion fair value gaps now that they're creating. So you want to see them providing support on the opposite side here, providing support. breakdown in price, order block. We did not get back to the order block, we got back to the low. Order block. Do we get back to the low or the order block? Or the top of the inversion? We filled it here. This inversion fair value gap would be a nice place for it to stop right about here. If we're going to continue down. You're in that one now. So you're back to this order block. But we've hit the 50% of the range. So if you decide to go long now, there's your long from 50% off. But we've got to start eating through these order blocks now to prove upside range. So to me, if we got into this order block again, ran up to the midpoint or ran through it with a closed body, come back and found support at it, then I'd say, yeah, there's a potential for an upside run. But we've just come back into this order block. We're finding these support mechanisms now. We want to see this push through here. And then that will become the next area of support. So are we bouncing off that 50% range again? 50% bouncing. And the fact that it's sitting on there like that tells me it's not quite done down there. Usually it just comes down, tags it, and then leaves. So the fact that it's bouncing around on there gives me the feeling that we might be still going down a little lower yet. We'll see if this order block holds. We've got old lows here. That'd be the midpoint. Rejection block. We have that inversion fair value gap here. Yeah, this is your eye goes down here, right, Lori? You see this little pocket of imbalance down here? Back inside this inversion. Oh, Greg had a short entry at 16.098. Greg, are you still in this? 16.098. Are you still in this one? Order block held price. Now these guys hold price. We're looking for these to hold price now. Create a little fair value gap in there would be kind of cute because we broke the low here with a body. Back to order block. Create a little fair value gap right there. drop down some more, come back up, tag it one more time, continue down, looking for 62% of that range. And I'm only giving you guys the PD arrays that I see. I'm not overextending my PD arrays. I'm just trying to give you PD array to PD array right now. So we said that they would still have more downside for this bouncing around on side here. It didn't give us a fair value gap there. That's fine. So we stayed inside this inversion right here. You see that? Look at that body right off of it here. So is that just our little dip down now into the 50% premium into discount? Now run back up above these equal highs? Let's wait and see. This would be nice to have a consolidation, impulse leg, fair value gap, return to it, and then run for these highs. I was in it from the previous run and ran back up to my take profit. Okay, I got you. So right now I'm kind of stuck between, do we continue down to the lower price, or are we stuck inside? I'm just trying to look at all the PD arrays inside here. This guy's not valid. It is now. That guy wasn't valid. This guy is valid now. Right there. So midpoint, or are we just going to go sideways for here a bit? There's the midpoint. Good. Now drop down. Or if you can eat through this guy again, you run back up there, take out the highs. So there's the midpoint. There you go, run down. Good afternoon, Lee. It's morning here in Canada. In Malaysia, it must be afternoon. What time is it over there? Okay, so we said that this would be we figured that it might be a little bit more downside. We ran down, nothing got validated until here. Then we set the midpoint, got the midpoint, and we're looking for an extension down. So looking for this to provide support right here off the 50% now. I'm like the candle whisperer today. The candle whisperer. Do as I say. Just tag the 62. Give us the 62. Come on. Little pokey poke. You thought I was from the States? From Canada. It's like telling Aussies, there's your 62. It's like telling Aussies or that they're British. I'm actually from England originally. But no, I've resided here in Canada. My friends down there in the United States are Derek. Laurison's down in Trinidad and Tobago. Craig, whereabouts you? You're Ohio? Who is in Ohio? Ohio. Who was that yesterday? Or was that Mr. T? Oh, looky, looky. More downside. Yes, indeed. This is actually quite, you know, despite a non-farm payroll, this thing's actually performing like PDRA to PDRA, man. Look over here. Well, I'm going to prepare for my golf outing. Enjoy, guys. Keep your eyes on the 15, 9, 3. Hello? Hey. Enjoy your golf game, Derek. Get a couple of hole-in-ones today. So now we're back to this breaker here. So if you think about this, we have gone from discount all the way up to premium, back into a discount, way up to a breaker. The midpoint held at the mean threshold of that breaker held. We had the rejection block hit, body's respecting it. Then we had the breakdown. Little fair value gap right in there. It just came in, tagged the top of it. This price is actually slightly above that one there. So there's an entry there right at 11 o'clock. There's a silver bullet entry for a short if you're willing to take it after this big run up there. But you're in a premium. Drop down, below a low, below a low, come back up inside the 4-hour breaker. Sorry, inside the 4-hour fair value gap, running for breaker to breaker. Because we ran these highs, making that a breaker. So now we're down here to here. So does this hold price now? We're back to the same thing we're talking about over here. Does this hold? Mean threshold, hold price. You see how it's freezing up on it? You get these little wicks that go through. Now, here, does it hold price and do we start to go back up? Because a lot of people are saying, oh, you know, it's definitely coming here. But like we said before, that has to give up the ghost for me to say, yeah, now we're heading for here. So you want to see that blow through it with a body close. Or at least start running these lows here. $15,893. Okay, we're going to put a happy face down there by $15,893 for Derek. $15,893. I think he's just above my little curiosity face. We're going to give Derek a different face here. We're going to give Derek the I see here 15,898, 15,898 right there. That's Derek's little face for the day. See what I mean? When you go from PDRA to PDRA, if you get up, if you're heading for here, think about the next downside PDRA, the opposing PDRA on the opposite side, down here. Is that holding price? Right now, the mean threshold of that order block breaker is holding price. So now we having that return. Remember I was telling you about compression earlier? Come down to here. If we're looking at extending the range down further, we got to lose that. And then you can say we're not going to be compressing. But if we go from here, now, where's the next PD array above price? We look for a swing. A pivot point. Looking for this guy right here. See, if you overextend your PD arrays and you say, oh, it's definitely going there now, you got to confirm that it's blown through the midpoint of this. It's coming back up, fill that fair value gap. Order block. I guess technically, last down close candle before run above a high. Inside that, but we're already through the threshold of that order block. And basically you look at each order block as it's forming. I'm just kind of, every time a new order block forms, I go, okay, now where's my area of support right now? And how do I, once we validated it right there, wick, then you think, okay, now the body and the threshold are my levels. So it came all the way down to the threshold and ran it out. So you go, okay, now that's the candle that we're playing off of right now. What range are we looking for? Are we holding on a range? We've got a swing point here. Does that swing point hold? We want to see that threshold hold now. And if we get above that candle's high, which we just did, that validates that as an order block. If we get below this candle's low, that validates it as an order block. So then we start to say, you keep looking. I look at these three PD arrays. Basic PD arrays is the low, the open, and the midpoint or mean threshold of that candle. And I watch each one of these candles as they form, and then I go, where are they in relationship to that range? And when do they become a breaker? Because the breakers are super strong. I love breaker to breaker trading. And basic order block is it finding support off of that order block? Is that now becoming a propulsion candle? Is that now, are we finding support off that propulsion candle? Does that make sense? I hope that makes sense to you guys, and I'm not just talking out of my butt there. So we're looking for 50% of this range. Now that we've broke above that high, we're going to get a body above here. You could say that's, it's still body. Not a body there yet. Did it close above there? Anyway, I want to see a body get above that. Then come back, find some support. So then you look for these areas here. So once you've got the order blocks, you kind of look at the order blocks, look at the fair value gaps, then look at how they support or deny price. So right now we haven't got a real good body above this fair value gap. So it's not an inversion fair value gap yet. Well, I guess it is now that we get a body below it. If you get a body below it, come back up to it, you find support, and we're going to eat through this guy. That's how I kind of look at it. So we've come up, we filled it, we come back down into here, that guy, and we're stopping right on that mean threshold. Boom, good. Now you're through it, looking through this guy here, and then you cut back into this guy and think, oh, there's that big breaker again. So we back to the mean threshold. We want to see this low get taken out, and then we can say, great, now we've passed rejection. Then I look for some support off of this to get down here. So you see the wick go through to mean threshold of the lower candle, but the bodies are still respecting this candle, and we're running up. Now we have a body above here looking for 50% again. Now there's 50%. Beautiful. 62%. Back to that order block. See? And if you were thinking that that was the run down, once again, you were denied. Like we were up here, we thought we were going to go long, and then we thought we were going to go short. But those breakers, I tell you, they're super strong. Don't overshoot your breakers before their time. Wait till that threshold is blown before you confirm that that breaker is giving way. Otherwise, we're back into that range again. So now we've got a new order block here. Small little consolidation, fair value gap forming. We could be running all the way back up into here again. We got to get through all this crap first. There's some high resistance here now. This is nice and smooth. This creates some resistance for us. So, fair value gap. Next candle, that one closes in 5 seconds, becomes a fair value gap. Then we want to trade back into it. Inside that inversion, get some support. You want it to stay open if you want to keep going back up again. Or price can just keep running from here, and you won't even get an opportunity to get in on that. There's 62%. Right back into the order block. Fair value gap fill. Mean threshold. So all we're doing is to come back into a premium to drive price all the way through. If we run through this midpoint here on a close, that's your candle, right? So if we lose the midpoint of this candle, because we haven't validated this one yet, that's our candle. We're in this bullish kind of run here now. So if we lose this threshold with a close on a candle, look for a run below that low, and then you're back into this guy again. And you're back into the mean threshold of that. If we take this guy's holding all that up right there, and that breaker's holding up price there. Their mean thresholds are, I tell you, they're golden, folks. So now you come back up into filling that. Good. Now if we drive all the way through, candle whisperer. Now that we want to see this this candle get validated on the upside. Now imagine taking trades at every one of these areas. What a clean up day. Okay, don't like that. I want to see some big bull candles going up here now. I want to see this high get broken. Midpoint. You want to lose the midpoint of this candle here now. If you want to go bullish. If you want to go bearish, you don't want to see that get broken. And you don't want to see this one get broken. So if it runs up, just cleans that out and tags that 70%. I'm going to put my things in the middle here because I don't like them on top. It throws me off. That's better. There's right on the 70%. Right on the mean threshold of that candle. Now you want to see big bold candles shooting back up again. Get through that if we're bullish. If we're bearish, unleash the hounds, because now we've got this guy's been validated now. So we have the wick threshold right there. Well, let me close this guy out, get him out of the way here. Now, do we get some support off of here and they'll start driving up? We can still come back into the mean threshold of that candle, which is also an inversion fair value gap now. Fair value gap, come back in, fill, order block. I'd like to have seen it stay open, but it didn't, no big deal. Still, your stop loss would have been down here. Your entry would have been here, here, or here, depending on which one you prefer. If you're really ballsy, you say, I'm going here. Stop loss there. Aiming for that high is the first little quick profit run. If you're going to go here, you would have had 47 to that high there is 62. There's 15 handles right there. So is this midpoint hold? Because now that's a valid order block. You want to see that give way for more upside prices if the mean threshold holds, which is right there. See how it bounces off these PD arrays. All the time you guys watch these PD arrays cleanly, you'll see there's a reaction. That doesn't say that that's a permanent reaction. It may just pop through it. But if that's a 1 minute candle and it just hit that array, then right now it just ran down into a discount array on the 1 second chart. Not that you'd be trading 1 second chart, but to make my point that this is a fractal thing. Everything you see happening here has a fractal moment further down. So now we're running through this. So that 70% optimum trade entry order block is holding. You want to see this one give way with a body now. We got lots of inversions here. One here, one here, one here, little guy here. There's a whole cluster of, you can see how price is kind of bouncing around inside these inversions right now. Which one provides support? If you're looking at this range from here, oops, sorry about that, to there. and then we take this guy here like this, and we go, miss the quarter, 25%, 50% of that range. The larger range, we already took out the 50% of this range. We went into the premium of that range. Right there. There was the 50%. We came into the premium range. And now, if you're looking at that, from there to there, there's 25%. This is 25% of that entire range. So if we start to work in this 25 to the 50% of that larger range, then do we move back above? Because our 50 or 75% of this range has been worked. 25% now is getting worked. Bottom half, top half, middle portion, right? But on the higher range, for in this internal range of liquidity, we're still in the 25% discount range of that. 50% was worked, 75 hasn't, and neither is the 25. Though you could say it's been worked pretty good above. 75 to 100% has been hit. So you got that little area there. Yeah, there's a small little portion here, but there and here. Once they're done, we've ran through that now. That looks good. Now we can continue down. Nicely done. So there's a quick retracement to an optimum trade entry right in an order block that provides perfect support at the mean threshold. Came back down, find support at that mean threshold right there. And we're talking each one of these candles as they're forming. I'm not going back in hindsight in this. I was calling this as it was happening, right at these areas that you were looking for these candles to provide support. You want that threshold to lose, and you've lost it. Good. Now we have a downside objective to run for. Now you can start looking at this stuff down here. Because now you look and say, the moment it breaks that low, which it did right there, does this candle become support? Does this candle become support? Or now, do we have a break in market structure to the downside, big bold candle like this, small fair value gap, come back up, reinitiate these candles, one of that one or that one, and then start driving down. Man, this market has been fun to call today. It's been a pleasure to talk about this one today, because it's just acting very nicely, even on a non-farm payroll day. So there's a return to the bottom of it. The body, you can play bodies. So that midnight candle again, the Midnight Express, we came down, tagged it, went through it. Do we come back, find support at it now, and continue down looking for this here? You're in California. Ah, the sun and the fun of California. California. Validated the order block. So exactly what we're looking for. Big bold candles down. Look for this guy to provide support. Wick, body, I don't care. Anywhere inside that dude gives you some support. It is a breaker because it ran above these highs here as the parent breaker, that big ass run up there. Didn't break those highs, but it did break these, which is a swing point. So if we come back, find support anywhere inside that thing, it's a short. Looking for this stuff down here now. I got about 20 more minutes left in me, and then I'm out for the day. If you enjoyed the calls today, then smash your like button, and if not, no big deal. Let me know if you liked what we were calling today. Thank you, sir. Thank you. Thank you. So the curiosity pieces are down here for the day. It'd be interesting to see if we book it down into Derek and Darren. Derek and Darren. That's where I was going curious this morning when it was doing this big rundown. And then that was the line in the sand for me, that 4-hour block, and it literally hit right at the top of it. And now we're slowly getting a grind down. So it's a good thing I didn't go short there with my stop loss sitting right above there, because it would have come right up to the stop loss. It would have been ugly. Now you see the interesting thing here is, see this regular trading hours gap? I love this fact that it's on the chart, because it gives you an idea of some objectives to hit. 50%, run back to a discount portion of that. If you run to the high, you see it pulling back into a discount portion, then running the high again, finding support on top of the gap, finding support on top of the gap, and overlapping New York open midnight candle. New York open midnight candle, finally ran through it, came back up to right there. Look at that, right on top of that gap again. Pop, 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 coming into this breaker, coming into these guys here. We just came down and tagged the top of this fair value gap here. That's a place where you can find some resistance. So again, if that's resistance, pull your fib tool from top to bottom, look at 50% and say, what's a discount, a premium area that I can get a discount run off of? Is it still support inside a breaker? Take that breaker, pull it all the way to the other side here. Top to bottom. Inside that, back to this order block, back to this little run above, tiny little high right back to the body with the wick right there. So do we have a premium we're looking for up here first before we run this low? So look for your PD arrays inside here and say which one should support price and which one is likely to give up. If it gives it up, how does this change my idea from short to long? What area would change my mind? And if you start asking those questions every single time you watch it, and not just wait for things to get up there, watch how price is moving off of each candle. This is reading price every freaking minute of the day if you're down at this level. Now if you're doing the same thing on the 15-minute, you obviously have a little bit of a break. But if you're watching it as we are here on the 1 minute, watch each one of these candles as if they were hourly candles, and you come back every hour and say, what's it done now? What's it done now? We're doing that right here on the 1 minute, and we're looking for what area provides support. Which candle am I playing off of now? Which range am I in between? Not looking way up here. I'm saying what candles support buying and selling on the 1 minute. What candle do I look at that provides me some support? That's the top, middle, threshold. The wicks, if you're really into long wicks, then you split the wicks up into quarters. And Lauriston's got a great way of doing this. Lauriston he can take these candles here and add a tick value to them. So let's say you can add a 2,000 or 4,000 tick value to this. You can actually see the PD arrays moving from the algorithm, still moving PD array to PD array, PD array, PD array. If you set each one of this block in here and say, set them at 4,000 ticks per candle. So each candle's worth 4,000 ticks. Or you're in a 4,000 tick range, then you'll actually see PD array to PD array, and you'll see it actually clicking and tagging those as they go. Nice. Order block. Back. Up. You want to break that guy now. Or this guy here. Support. Inside the breaker. Premium. We're in a discount, looking for a premium if you decide to run this sucker up. We have a break in market structure to the downside, come back up inside. What is sitting up in here that provides a run below here? Where's our breaker? Last up close candles before run below lows. These guys are inside these guys. So is it reasonable to assume that we could run above a wick above that into here and then pound down? %, wick above. Does that give us, sorry, see that run right there, 62% retracement inside this range. Midpoint of the breaker you're hitting right now. Clear explanation. Good for me to learn ICT language here. Yeah, sometimes you have to forgive me my ADHD. My mind just rips around so fast here. Trying to stay hyper focused can be fun if I can hyper focus on this, but I will say words. I'll go, oh, we're in the rejection. It's like, no, it's not a damn rejection. Then I have to stop myself and give you the actual terminology. So I apologize for just, if my mind is fixed on one word, it stays on that. I call everything the same word until I can get my brain under control and go, wait a second, that is not a rejection block. That is a breaker. Slow down, get focused. Now go back into hyper focus. So I apologize for that. So you'll get different languages overlapping, so I hope it doesn't confuse you too much. So our breaker's holding price now. Order block here. Does this order block hold price, or are we still going to run back one more time? We're in this little consolidation here. Come back in, midpoint of that, and then start pushing back up again into a premium price? Or do we just the breaker hold and we just roll over and continue down? You'll see why these breakers are just little traps, or they're beautiful places if you play them properly. You can see how they can be really wonderful little creatures to hold price. When you finally get through them, do they hold price quite well? That's the order block hit, and right off that, what's this line here? Anyone? What's that line right there? Are you watching your charts? That line is the Bueller. Anyone? Bueller? The midnight candle. You guys are probably too young for Ferris Bueller's Day Off. A good old classic back in the 80s, I think it was. So see how right now you're stuck between this guy here and this guy here. Which one are you going to do? You've hit the threshold of that, and now you hit the threshold of this. We're anticipating a nice premium level to run to. So, because we're still in that discount of that range. So if you're smart money and you want to move back to a premium so you can unload it at this nice equal lows that you've created here, you want to get back to a premium to pair them up with some boys who are waiting for you down here. Now, what if you do clear this? How do you get a body on top of that candle? And there's a little inversion fair value gap there. All of a sudden, this fair value gap here becomes important for me as an inversion, because now you're getting on top of it. You find a level of support there. Now we want to run up into that premium level we were talking about. So you're probably hitting 50% right now. Top of the breaker. %, right on the money. So now we want to start pushing up into here. Do we get a nice little premium up here? And does this now become a breakaway gap, stay open, and then we start to run back down? I want to see that hit that and reject off of it. If it doesn't, we may be looking for a deeper retracement back into a higher PD array. Remember, we're talking about PD array to PD array. If we're in this new range, this range has been extended now, so that bigger range, if we're inside that bigger range, what's the premium and what's the discount inside that? So if we decide to run all the way back up into a premium, again, we have that 4-hour inversion fair value gap now. We've run up, we've hit it, hit it, hit it, we've maxed out at it, we've come back, we've tagged it again, gone short. We came back up to the bottom of our, that might be the difference between this spread up here. See, it's a 0.5 spread. That there is a high of 41.00, and this one is a 41.75. So that's a 0.75 difference between there and there, which is the difference between, it's just outside of the spread there. But you get my point. 50%, bodies are respecting that, wicks do the damage. We want to leave that open for a breakaway. If you're looking for absolute precision, I'm sorry, your eye was off by 0.75. So order block, we want to see this give way now to continue down. Otherwise, we've got that little trend line phantom bullshit happening here. And then we have another run back up into potentially filling that fair value gap there, which starts to turn my mind to, well, if that's not our breakaway gap now, then, and it starts to fill, I'm not so bearish for a while yet. So I want to see this threshold now give way. Candle whisper. Go, go, go. So you want to see that close below there. Honestly, I have no idea. While from my experience, non-ICT, there are lower and higher highs forming. Good short entry for me. Still not taken this threshold. We've wicked it, but we have not broken it yet. So now between this guy and that guy, price has to make up its mind what it wants to do. Either we're going to come back into this fair value gap here, into the mean threshold, which is filling that fair value gap, back to that candle there. Now we validated it. So we're between those two. Now you may not like this level of detail. Your charts, you may go, who's going to be pissing around with a 1 minute chart like this? This is ridiculous. You're missing my point. If you can read the 1 minute chart like this, this would be no different than reading a 1 hour chart. Fractals are all the frickin' same. And you'll never convince me. Don't even try to convince me of other things. I won't believe it. I won't buy it. I'm fully immersed into the whole algorithmic, and you've seen me call this all day or all morning here, like right off the freaking candle. So this is algorithmic price action happening on the 1 minute If you went down to the 1 second, you'd see doing the same thing. If I moved to the 5-minute candle, we'd be doing the same thing on a 5-minute candle. I'd be looking for the exact same things to set up. Now you take that all the way to the 1-month candle, and it's the same freaking thing. Same thing, never, ever changes. Given 1 month candle, if you're wrong and that order block gives way, you're like, crap, I was hoping that would support price, and it didn't on a 1 month candle and started rocketing down here, then you're definitely on the wrong side. But if it breaks through that, then you can say, well, on the weekly and daily, how do I get back on side to continue on? Now that I know that that's broken, great. I'm all right with that. I took a loss, no big deal. Now start to go down to the lower time frames and look for the break in market structure that supports the seasonal tendency to run further down. You use things like seasonal tendencies then to support a change in direction. I see still catching it up. Thanks for the insights, man. Gonna watch more ICT videos on the weekend. Good for you, buddy. Good for you. I recommend everybody go to ICT. I'm not selling anything here. I am just reading price for you folks, and you can participate if you want. Ask questions if you want. If I don't know the answer, I won't know. I'll tell you, look, I don't know. As you can see, I have a very specific way that I like to read price action. I like to get down and dirty into these 1 minute charts and read it as it's happening, and then practice that. On days, on the weekends, I will take my charts and I will rip them back like this. I'll go, and I'll close my eyes and I'll just keep scrolling back, and then I will make it go nice and wide like this. And you see that one candle there? I quickly analyze this because the markets are closed, and this is how I practice, is I will go one freaking candle at a time, click, click, and I go, where would it go from here? If this was 1 minute from now, where would I expect it to go? And I will click the candles one at a time. And that's how I practice on when the markets are closed. I'll do that. And I will read price action as a practice. And that's my idea of dedication to the charts. May not be yours, but that's okay. I'm just giving you an idea of what I like to do. Now you can take that and do it on a multi-chart as well. You put your daily up here, your hourly here, and your 15-minute here. And you move your daily all the way over, and you line your daily up, and you say, where do I think this is going to go tomorrow? I'm going to practice this on the hourly, and the 15-minute chart right here is going to be my entry. When do I look for that candle to go up? I'm looking at the hourly now on the same time frame, same day, and as you click forward and you make a new day, then you move that over by one candle, you move this over by one, and that's how you practice. Well, not how you practice, but that's how you can practice. And then you can use all this hindsight. When you hear people say hindsight trading is such bullshit, you're a fucking idiot. You have no idea how to use hindsight to hone your skills. That's all I can say, is you're a moron. You got to look at this stuff. The data is right here for you. It's already here. This is your way of practicing this. This is your way of finding a great opportunity to use the markets that's already here. And if you read it and you're clicking through this and you're saying, I think it's going to go up based on what I'm looking here on the daily, on the higher time frames, you're seeing the higher time frames, you're seeing the lower time frame and the micro time frame, and you're acting here based on what you see on the hourly. And the next hour that goes, you click it and say, is that going where I think it's going to go? I think it's going to go here. Well, if that's my objective there, then this 1 minute chart, that's my objective on the hourly. I'm going to go long here. And even if it retraces, I don't care. My stop loss goes here. I'm aiming for that higher time frame premise. Now you can start practicing. I'm looking over here and I'm sniping here. I'm finding the crosshairs on the place where I think price is going to retrace to, and then you start looking at time and you really start to zero in on the accuracy of your your trading. That's just one way to play, for what it's worth to you. So then you have to go back into the charts and you have to get your head around. We've been out of this for a couple of minutes while I went on to my little rant there. Then you're going to go back in here and start saying, okay, which candles are which ones am I bouncing off of? What range am I in? Am I in a premium or discount of a small little tiny range here? You can go down into the 30 second and see if you can get better thing there, or you can even go into 5 seconds and say, all right, now let me get my bearings straight here, and then I can start going back up. Now I'm in a premium, coming back into a discount, running these equal lows, looking for retracement back into here or off this order block. I'm between this guy and this guy. And that's how you can practice even down on the 5 second chart. Not that you'd actually trade it. We use the 5 second chart to confirm an entry to go short or long. But if you guys want to practice this, you can practice right here now and start saying, okay, now what order block is it forming? Which one am I between? What range am I in? How do I get out of this? If I was going to break out of this larger range here now, what do I need to, which order block needs to give up price in order for me to validate a run in a different direction? I need to see a big bull candle going, and you just kind of talk it to yourself. It's no different when I have students to come in. As a paramedic, I have new students that come in and I go, talk me through what's going on with this patient. This is where you can see what I do when I'm with students and doing paramedic stuff. Same kind of thing here. I'm talking myself through it. I talk to myself all the time. What's it going here? What's that doing there? What am I expecting it to happen? What's this guy's ticker? What's the symptoms? Is that performing the way a heart attack normally performs? What's the algorithm? Which one are you going to go down? What's the most important decision to make right now? Blah, blah, blah. So that's kind of my critical thinking and how I practice it, for what that's worth for you guys. John, Sacramento area, California. John, pleasure to meet you, my friend. Welcome, welcome, welcome. Where's your ICT skills come from? Are you new to the ICT stuff? Are you a veteran ICT trader? I hope you're not a troll. I hope you're a nice guy. We all like nice people here. We're all here to help each other out. No egos. We're having a good time. Sacramento area. I'm coming down to California in January. My wife's teaching a bunch of teachers down there, and I'll be down in LA. Never been to California except for the up north there. We did make it through into the forest with the big trees. All right, that's pretty much it for me, boys, today. John, thanks for playing. Nice to meet you. Been trading for a long time now. Been trading ICT for over a year. Woohoo! Good man. Good man. Good man. I like to hear that. John, you are welcome anytime, my friend. Sorry, I'm going to be checking out. This is kind of going sideways and mushy here. But if you guys liked it, today's analysis, and it was a fun analysis day today. I'm going to have to admit, I had a good time today. The markets were, despite the fact that it's a non-farm payroll day, the markets did exactly what we're looking for. We were calling this minute by minute. Beautiful descriptions. The market was working just the way we wanted it to, and yeah. So I'm going to give you guys my last little thoughts on this before I check out and do my usual salutations on the way out. Look for this consolidation now. One of two things. You want to see a consolidation like this. We want to see a a price leg breakdown, create a fair value gap, come back up into half of it or the bottom of this, and then break down, aiming for our objectives. And remember Derek and Darren's objectives. This is where I was curious today. Derek's curiosity is here. Lunch. Who knows what the heck's going to happen at lunch? We tend to go sideways during lunch, and then we tend to seek and destroy the highs and lows created before lunch, right? Well, look at that. There's a high, there's a low. They're pretty close. So there's the AM session. You're still inside the AM session whilst inside lunch. So it's anyone's game. We have equal highs up top. I'm kind of curious. I'd like to see those hold price, and we attack them again next week. I'd like to see it pull back in here, but we may just get big bull candles ripping up. Anyway, either way, if you see this consolidation, wait for a breakout return and then go, or a breakout return and then go. Look for a quick return for your low. You're getting back into this gap that was created for the regular trading hours. Look for a run below these lows into Derek's area. Or if we do get a break above this high and you get some support off this fair value gap on the upside, look for this here and the range. Look for 60 or 70 optimum trade entry high in here. See if it still supports price for going higher. The same kind of thing we're looking at for PD arrays. Do they support price? Do they not? When do they give up price? If they continue to support price, we might be running for these old highs here. Okay, that's pretty much it for me for today. Thank you guys so much for popping in. I really enjoyed it. We'll see you guys on Monday. If you enjoyed this, tell your friends. I'm just here to try and help as many people as I can read the market a little better. I'm learning all the time as well. I've been doing ICT since 2016. I was one of the original guys that got in back in October, or in August, I should say. And I still have a fun time trying to read the charts. There's still tons of mistakes I'll make, so don't take me for gospel by all means. Oh, here we are. Look, we're heading there already, just as I'm ready to leave. We're looking for this. So now we see this breakdown, big impulse leg. We want to see that hold. Nice. It froze as an impulse leg. Great. Create a fair value gap, come back up, find support here, and run into here. Or if she decides to get ugly on us and just pound through, there's our downside objective that we were talking about just before lunch, or while lunch was happening. We did hit that order block, 50% of that range right there. It held price, and now we've got downside. What a beautiful delivery. Ooh, we called all that. Anyway, see you guys on Monday. Have an awesome weekend. A lot of love out there. You guys be friendly, be kind to one another, help each other out. If you manage to make some money in the world and you got a little bit left over, help out some of those less fortunate people that are having a rough time, a rough go out there, especially the elderly. Gotta love the elderly. I love those people. Speaking of elderly, my parents are coming to visit for Christmas tomorrow. So I'm excited to see them. Super excited. I still got my parents around, and I'm going to enjoy them. So enjoy your family, and we'll see you again on Monday. I will be making my entry times much shorter now that I have family here over the Christmas holidays. Important to spend time with the family, so I'll be spending time with them, and I'll be in for an hour or two in the mornings to kind of check in on the market, see how it goes. Look at that! Look at that! Hammering through. Finally hitting the objective. Oh, what a delicious return from a 50%. How many? Look at that, boys. Look at that. 50%. You got 40, and we're all the way down to here. So you're like 50 handles. There's another 50 handle trade today. God, love it. Love it. Delicious. I will be working while they are here, and I'm only going to do it for an hour or so. So I'll start my analysis at 7 o'clock Canada time, which is 9 o'clock New York time. And I'll be doing this probably till about 11:30. So it'll probably an hour and a half, maybe 2 hours till 9 o'clock. So that'll be 11 o'clock New York time. So I'll try and keep it under 2 hours, and then I'm going to go spend time with my family. So all the best to you guys this weekend. Be safe out there, and I'll see you on Monday. Take care. Thanks for popping in, John, by the way. I really appreciate the new guys that popped in. Thanks for the other guys that continue to be here.